Are you ready for some crazy price action from the crypto market? Because in less than 24 hours, we have some fresh inflation data coming out in the form of CPI, and that's going to be a big deal for markets. Hi everyone, my name is Justin Bennett. Hope you're doing well. In today's video, I'm going to break down exactly why Wednesday's inflation data is so critical for the crypto market and also how to trade Bitcoin based on that data. Now, don't worry, because even if you're a beginner, I'm going to keep this as fun and simple as possible. So the very first thing when we talk about inflation is we have to understand what inflation is. And simply put, inflation is the rate of increase in the prices of goods and services over a specific period. Now, typically this is measured year over year. So for example, when we saw 9.1 inflation last month, that was for the month before because it is 1 month behind. So what that meant is that inflation rose 9.1% from June of 2021 to June of 2022. Now, the reason inflation matters, apart from everything just costing more, is the fact that it suggests to the central bank that they need to either raise rates more aggressively or kind of back off on their rate hikes. So if inflation comes out higher than forecast, which we'll get to in a moment, it signals to the Fed that they need to raise rates a little more aggressively, which markets do not like. Markets don't want to see rates going up aggressively, especially since the Fed is already on track to increase rates as aggressively as they are. Now, on the flip side, if inflation comes out lower than forecast, then that's going to signal to the Fed that they can maybe back off a little bit. Maybe instead of a 75 basis point hike in September, they go with a 50 basis point hike. And markets would love that, not only because it would signal that the Fed is going to back off a little bit, but it would also signal a potential peak in inflation, which a lot of people are talking about right now. Even Elon Musk at his recent quarterly call said that he thinks inflation has peaked, even though we could be entering a mild recession. Now, of course, I agree with the recession part because frankly, we are in a recession already. Now, as far as the peak inflation, we'll have to wait and see, because a lot of economists right now are calling for peak inflation, but really, to be honest with you, nobody actually knows what tomorrow's data is going to bring. Next, we'll get into Wednesday's forecast number for CPI, and I'll explain what we need to see in order for Bitcoin and the rest of the crypto market to either move bullishly or bearishly on that news. But before I do, if you want more content just like this that shows you how to make money in the crypto market, be sure to subscribe to the channel and click that bell icon to get notifications. And don't forget to smash that like button and also leave your comment below. All right, so let's take a look at what the inflation consensus is for tomorrow's CPI reading. Now, remember, this is 1 month behind, so tomorrow's reading is actually for July. Now, when we look at the consensus or the forecast number, it's 8.7%. So remember, this is year over year. So what this means is that the forecast number for CPI tomorrow is an 8.7% increase in the inflation from July of 2021 to July of 2022. Now, remember how I said that lower inflation would be better for markets, and that's simply because lower inflation would signal or suggest that the Fed is likely to maybe back off of the rate increases at the next meeting. So instead of a 75 basis point move, we get a 50 basis point move, which would be great for markets. And a lower than forecast number tomorrow would also indicate that we may have seen peak inflation, which would likely be very bullish for markets. So in my opinion, if we see tomorrow's CPI number come in anywhere from 8.6% or lower, then that could potentially be bullish for markets. Now, the lower the better. If we have 8.6% or even 8.5%, then the outcome could be a little bit mixed. However, if we see something in the lower eights, all right, in my opinion, that would likely be very bullish for the crypto market. Of course, on the flip side, if we see inflation come out at 8.8% or higher, especially if it's in the 9%, if it's in the 9%, then in my opinion, we're likely to see a very aggressive sell-off from risk assets like stocks and crypto. But generally speaking, 8.6% and lower would likely be bullish for the crypto market, whereas 8.8% or higher would likely be bearish for the crypto market. So if you saw yesterday's video, you know that I said Bitcoin could move to $38,000. Now, there's a big could with that, because what I said in yesterday's video is that the market had to maintain above 23,450, which so far Bitcoin is not doing. If we look here at the daily chart, you can see where Bitcoin is trading well below 23,450. And in fact, today's session is putting in a bearish engulfing candle. Now, this is a potential bearish engulfing candle because we do need a daily close in order to confirm it at 8 p.m. Eastern. So if Bitcoin were to close this way going into Wednesday's CPI numbers, this is a relatively bearish look for the market going into those inflation numbers. Now, the thing is, like I said earlier, nobody knows what inflation is going to be, nor how the market is going to react to it. So either yesterday's breakout above this level was the fake out, or today's move is the fake out. Either way, though, I think that it's very easy to get chopped up in the volatility that we're about to see over the next 24 to 48 hours. But as for how to trade Bitcoin going into Wednesday's CPI, it really gets very simple when you look at the levels. So this all comes down to a daily closing basis, meaning that if Bitcoin closes today below 23,450, that level flips to resistance, and we're looking at a move potentially toward that $22,400 area and potentially a retest of 21,600. Now, alternatively, if we see a close back above 23,450 either today or sometime later this week, then that level stays intact as support. And we're then looking at 24,200 and potentially that mid $25,000 area. However, a couple of points that I want to make here is that I think it's very risky to place a trade going into Wednesday's events, assuming that you know what's going to happen or how the market's going to react. I think that a better approach here is to wait for the day to close tomorrow and then go from there. So when trading Bitcoin or any market for that matter, when dealing with a very volatile event like Wednesday's CPI numbers, the best way to approach this, in my opinion, is to basically just stand back, wait for the day to close, and then either look for long or short opportunities depending on what kind of break we get. In other words, close below 23,450, and that becomes resistance. The same thing with 22,400 and 21,600. And then alternatively, you might want to pursue long opportunities if we do get a reclaim above 23,450 or that $24,200 area. Of course, none of this is financial advice because it really is just my opinion. But like I said earlier, today's session isn't setting up too great going into Wednesday's CPI. It is looking relatively bearish. And lastly, as far as how I'm trading this, I like to trade the daily chart. So I'm going to sit back, wait for Bitcoin to close the day on Wednesday, see where we are, and then go from there. Just remember not to chase the market, especially with volatility coming up like it is tomorrow. There are always going to be second chance opportunities and even third chance opportunities to get into a market once we do see that initial move. As always, have a wonderful rest of your day. Smash that like button and subscribe to the channel if you haven't already, and also claim your $4,000 in bonuses from Bybit or $100 in Bitcoin from iTrust Capital. Those links are below. Thank you so much for watching this video. I'll see you back here every day, Monday through Friday. Until next time, take care.